If you were to see this chart forming in real life, where would your trades be? Pause the video to do your analysis. Resume when you're ready. Following would be my entries. And all these have a certain logic behind them, which I'll try to explain now. So let's get the annotations in. Well, let's start from the beginning. The market opened with a strong bullish candle. The market was neither gap up nor gap down on this day, so it was in continuation from the previous day. I'll now use some annotations to highlight some things. We saw a rejection from the 20 EMA closing from a red candle close to its low. We had this point here. So a stop order with a tick below the low of this candle seems appropriate, seems like a good entry. You could use your usual capital here, usual amount. And I'll tell you why I'm saying that, because say if you were to enter on this candle, which happened after the trend line break, we don't know how the market will react from this low. So here I would enter with a half quantity short, half of my usual, because I don't know how the market would react. But since there has been a rejection from the 20 EMA and a strong red candle, makes sense for a short entry, although with small capital. So this is where we need to demonstrate some caution, because we have lows becoming higher and higher, aren't they? Here, here, and here. And eventually the wicks are becoming more prominent, and finally we see a big green candle. So at this point, around this point, you would close any short positions. And your stop loss was here when you took the entry on this purple box or one tick below this candle. That was your stop loss. Your take profit would be like 1:2 or 1:3 ratio based on your risk appetite. But at this point, you could take a long trade again with half of your usual quantity, because this could just be a pullback and might reverse down again. But since the lows were getting higher, I know the notation has become a bit unclear. Let's erase everything. Since the lows had become higher and higher, makes sense to at least try for a half or a quarter of the usual quantity long, with your stop loss just right here at the open of the candle. You could put it here as well, but I think open is a better idea. Then your target could be EMA again. We could try to retest the EMA. Why not? We actually did that. We went a bit above. But now this seems like a nice reversal pattern. However, it fails. You would take a short entry below one tick of this candle. It fails though. And that's just unlucky. We couldn't do anything about it. Objectively, it's a sound entry, but it fails. So you'll get out with minimal loss, and your stop loss would be here. This would be your SL, just one candle. That would be your stop loss. Maybe some people would put SL here. That too is possible. So you would lose 1/4 of your, not 1/4 actually, I'll put at least half quantity here. So you lose half of your usual quantity, maybe like 0.5% if you risk 1% per trade. So that would be lost. Next, we see a break above 20 EMA. I think I should clear the notations again. So we see break above 20 EMA and fails miserably from this candle. So a stop entry one tick below this red candle makes sense too. You do go down, you get some reward here. You may exit on this candle. That seems like a more appropriate stop, because it was an inside candle and we didn't even go towards the low of this previous candle. Makes sense to clear the annotations once again. And then once we see the inside followed by a strong bull candle, makes sense to take a long trade here. Close any short position. We have an inside candle plus double bottom. That's your double bottom. That's your inside candle. We break above the inside candle with decent context. Makes sense. So we do that, we go up a little bit, again test the EMA, break down. This is where many people would exit with their long positions. And then you could try to sell one tick below this red candle, hoping for a move down. It does fail again, so this would be your second failed trade and the only trade of the day with minimal loss. after this one. Then we have a double bottom right here. Good context because the market was in an overall downtrend from the day onwards. Seems reasonable to even sell at the market here. Your stop loss would be just above the high again. Your take profit would be 1 is to 2, 1 is to 3, wherever the key levels are, or if there are no key levels, then you take based on 1 is to 2 at least. You get out here, I mean, it's an unclear situation, right? We have a minor pullback, then a strong candle closing at its low, then inside, and then a bull surprise candle. So it would be unfortunate if you did hold this trade until then. Good idea to exit here, but of course not easy to see during real time. Then we see a mini trading range here, no sign of strength by the bulls. And finally we get this huge red candle. We can enter with a stop order one tick below the close of this candle. And that would be a final trade of the day. You can book all your profits in this region. You have a minor pullback here, gets failed by the EMA again. And yeah, that would be your additional profit right here. But that's all. I mean, I do hope that you see the logic on each trade, right? It's fairly clear. I haven't tried to make anything too complicated. These are just basic patterns forming in good context. It would make sense to take most of them, if not all of them. Let me know if there are any other candles you see possible trades on. Personally, I did not. And one thing I would like to say is that by the end of the 18th candle, which I think is either this one or this one, we probably knew that the market was going to be in a bearish day or a trading range day because of this leg down. There is a rule that just after the 18th candle of the day, there is a 90% chance that the market has made the high of the day or the low of the day. And that indeed happened. By the 18th candle, we had the high of the day just here, right? This became the high of the day. That rule in mind, if we were expecting a trading range day or a bear day, it would make sense to take any sensible entry short. So for example, this was an excellent entry. This was an excellent entry. Potentially, this was also an excellent entry. And yeah, with that, I mean, the purpose of this video is to, find all the patterns that occur in real time. Well, backtest them at least, and then be able to spot them during real time. I hope you like this video. I hope you agree with my analysis. And if not, that's fine too. You can let me know in the comments where you might think I may have gone wrong. I'm still learning, so would appreciate any constructive criticism. So thank you for watching this video. Do let me know.